Hello folks, you're welcome back. This is Karis Trading Institute, and once again this is the weekend commentary for the dollar and foreign currencies. We will quickly be analyzing the dollar just so we know where the direction of the benchmark asset is, and then we'll be looking at the underlying assets that we would like to trade. Foreign currencies, we will be doing specifically a top-down analysis on the GBPUSD because that's my favorite currency that I trade. Okay, so before we usually start analyzing the dollar, would like to know what's happening on the fundamental basics. So we'll be taking a look at the economic calendar on forexfactory.com, and we're interested in identifying high and medium impact news events. We want to know when they will be unfolding in the marketplace, the day, the time, and the type of events, and the impact is going to have on the assets that it's going to be happening on. Okay, so on Monday you can see that we do not have a high impact news events, rather we have two medium impact news events, one coming up at 1 o'clock on GMT +1. You will be seeing a medium impact on the dollar. Then we have a medium impact on the CHF pairs around 8 a.m. Okay, then you should just go through Tuesday, Wednesday, Thursday, Friday. Take note of when these events are going to happen. On Wednesday we would likely see CPI on the CNI and high impact on NZD, alright, New Zealand dollar. Thursday we have CPI also on the dollar around 1:30 p.m. so just go through and see the type of events and when they are going to come into the marketplace. Okay, usually why this is important is because price would usually form the high or low of the week around the times that these types of events are happening, in sync with the weekly market profile, especially because we anticipate to see price forms the high or low of the week between Monday to Wednesday. Most of the times it will form on Tuesday. Alright, so if we see a high impact news on Tuesday between London and New York session, we anticipate to see that pair or that asset form its high or low of the week during the time that this event is going to come, because the medium or high impact news is going to inject liquidity into the marketplace, and most of the times it will induce retail to the wrong side of the marketplace. Then it forms the high of the week and begins to trade lower in a bearish week, or it will induce retail to go low, all right, during that type of news, and all of a sudden it forms the low of the week and it starts to deliver to the upside during a bullish week. Alright, so that's why this is important. So we go to the dollar because the dollar is our benchmark asset for foreign currencies, and on the dollar we are interested in knowing what the institutional order flow is, especially on the higher time frames, because the higher time frames are the main drivers of liquidity, the monthly, the weekly, and the daily time frame. So we just go to the monthly time frame and we want to see where price has traded from, where price is currently, and where the drawn liquidity is on the monthly time frame. So just like we've been seeing previously, price has been in a bearish institutional order flow in the previous month. Alright, what happened previously? We saw that price took out sell side liquidity here, repriced into a premium mitigation block right here, then started to give us a displacement to the downside, traded below just 50% of this entire range between the low here to the high. Alright, and then we are still seeing some level of liquidity residing below this old low. This is where price is currently. Price traded into the fair value here below 50%. Okay, and that bullish mitigation. All right, then price started to reject into the inside, even though this is a repricing on the daily and the weekly time frame. Okay, so what I'm seeing currently is that there is still a pool of sell-side liquidity below that old low with the fair value gap right here. So we would like to see price trade into that level. That will be the draw liquidity on the monthly, the old low, the fair value gap. Alright guys, in confluence with seasonal tendency, we're anticipating to see a bearish dollar during these seasons of the year because of the seasonal tendency. Alright guys, so let's quickly take a look at the weekly time frame. On the weekly time frame, we want to be seeing clear bearish expansions, bullish retracements, and that's what's been happening in the previous months. Bearish expansions, bullish retracements into bearish order blocks, because in a bearish order flow, bearish order blocks would usually be resisting price movements to the upside, and in a bullish order flow, bullish order blocks would support price to start going up. Okay, so price retraced again into bearish order block with a fair value, give us another expansion to the downside. Now it's reacting off that bearish order block with implied fair value 50% of that candle wick right on the weekly time frame. This is also at a mitigation block because price had formed a swing low, swing high, but this is a failure swing, couldn't take out the previous high. Then a shift of market structure, a break of market structure right here, that's a mitigation block. So where is the drawn liquidity now? The old equal low here, the equal low here, a tiny fair value right below this guy here. You can see that tiny fair value that's right at the low there, that was just barely traded into. That's also a drawn liquidity, okay, with also that monthly fair value gap, that's a drawn liquidity as well. Then on the daily time frame, we are interested in identifying clear market structure, lower low, lower highs, lower low, lower highs. So you can see every time price trades into a higher time frame institutional reference point, it gives us a shift of market structure and starts to trade in the direction of the market. All right, so price traded into a level here, gave us a shift of structure. Now we have repriced into that weekly mitigation and order block, which is in confluence with a daily breaker block. You can see price from the higher high, shift of structure, that's a breaker block, price traded into that breaker and creates a swing high, 3 candle price action where the middle candle forms the swing high with 2 candles by the left and right forming lower highs in this case. Okay, this is a swing high. Then look at that displacement to the downside. It tells us that there is volume in the market to start delivering to sell side liquidity pool in this case, because we are in a bearish order flow. All right guys, so let's go to a 4-hour or 1-hour time frame. We are looking to see a clear shift of market structure. So on the 4-hour time frame, you can see that on Friday ahead of the NFP, all right, I already told you guys that we were going to be bearish on the dollar because we saw that shift of market structure right here. Price traded back into that fair value we outlined, all right, right at the breaker on that 4-hour time frame, and look at that expansion during the NFP. Okay, so what are we looking to see today, Monday? We're looking to see price trade back into this previously created range and this liquidity void. Okay, 2 things would happen. Price would either trade 50% of this entire range, or rather close this liquidity void, okay, or trade back into this mitigation block. All right, so let's do 2 things. Let's measure 50% of that entire candle range. 50% would be somewhere around this level. That will be consequent encroachment as price starts to trade to the upside. We are looking to see it give us some reaction at 50%, because that's CE, consequent encroachment. Alright, so let's take a look at 1-hour time frame for more clarity. What we are doing now is called top-down analysis. So you can see this is the 1-hour time frame. We really want to see price trade into at least that's 50% of the 4-hour fair value, and it's a liquidity void. You can see it all on the 1-hour time frame. All of this one-sided price delivery that has not been opposed by a bullish price action. It's a liquidity void. We like to see price trade back at least 50% of the entire void, or even trade into this 1-hour breaker block. You can see this price took out the high here, then shift of structure right here. So it's a 1 hour breakout. We like to see price trading to that level before we start to trade to the downside into sell side liquidity pool. Alright guys, so this is my view for the dollar, and we like to do the opposite on foreign currency GBPUSD. Okay, so the draw liquidity on the 1 hour of the dollar is this low. All of these lows here, old lows, this is equal low. You can see the void here. That's all of these are the drawn liquidity. Then let's take a look at GBPUSD. GBPUSD. So we quickly look at the weekly. The weekly time frame, you can see price traded into a bullish mitigation on the weekly time frame, and the drawn liquidity still remains the equal highs above here and the fair value right here, or you can call it the volume imbalance on the weekly time frame. On the monthly time frame, actually there is also a drawn liquidity that I outlined. You can see that. So our drawn liquidity on the monthly, it's the old high, the fair value. Okay, look at what price has done. Price has been in a bullish order flow, creating bullish order blocks that usually support bullish pricing. You can see these bullish order blocks supported bullish movements right here, created another one, price traded back into it, and now we are reacting off that bullish order block, and the drawn liquidity is that old high, the fair value on the monthly time frame. On the weekly time frame, we can see it there. Price has been creating bullish expansions, bearish retracements, bullish expansions, bearish retracements. The drawn liquidity still remains the old relative equal high, the fair value of the monthly, the volume imbalance of the weekly time frame. On the daily time frame, we are interested in identifying market structure. We want to see higher highs, higher lows respected in a bullish order flow. Okay, so price has been doing that. It's been creating higher highs, higher lows, higher highs. You can see that higher low was a deep repricing into a discount bullish order block right here. Then it creates a swing low, 3 candle price action with the middle candle forming the lowest low on the daily time frame. This tells us that we are set for a bullish price movement. The drawn liquidity on the daily here is the old high, the weekly high, and the volume imbalance of the weekly time frame. On the 4 hour or 1 hour, we're interested in seeing shift of market structure to the upside. It confirms that we're set for a new bullish price movement. All right, so we like to see that created on the 4 hour time frame and better refined on the 1 hour time frame. All right guys, so let's take a look at this. So on the 4 hour time frame, look at what happened. Immediately price traded into that daily bullish order block, gave us a displacement to the upside. All right, that created a failure swing but a shift of market structure happened. All right, so what we have here is a shift of market structure right here. This is a bullish mitigation. It has a fair value gap right at that level. You can see that. So price should find support at this level. The mitigation, the fair value with the bullish order block right there. Price should support bullish pricing, and the draw on liquidity will be, you can see that relative equal high on the 4 hour as well. The candle bodies here are relatively equal. That's a drawn liquidity. There's a drawn liquidity here. All right, so there is an imbalance right here, and that equal high you can see on the 4 hour. All of these levels are levels you can take partials when you are long on GBPUSD. All right, so what I'm seeing right here is, look at this, the equal high there, the tiny imbalance right here. That's the drawn liquidity. Okay, so once you start to buy this guy, as it's approaching all of these levels, you can be taking partials or closing some of your positions so that you can pay yourself. Always pay yourself as a trader, because you can never be wrong paying yourself for something you've worked for. Right, this is the 1 hour time frame. So As the market opens during the London and New York session, we'll be looking to see price create a sweet entry model for us to go long on GBPUSD, especially when I see the GBPUSD trade below the Asian low, or when I see the 15 minutes create a shift of market structure right at the bullish mitigation of the 4-hour time frame. Alright, you can see this level. Once it gives us a 15-minute shift of market structure during the London or New York session, then I'll be interested in buying GBPUSD. Alright, especially when the dollar trades up into that consequent encroachment we outlined, or when the dollar as well gives us a shift of market structure in 15 minutes time frame. Then that will give us the confirmation that we can start buying GBPUSD and selling the dollar. This is my view on the dollar and foreign currencies. If you are new to this channel, don't forget to hit the subscription button, hit the like button on this video, and don't forget to turn your notification bell so you can stay updated every time I upload quality videos on this channel. Guys, until next time, I wish you good luck, good trading, stay safe.